Hello everyone, welcome to my channel. Today I'm going to talk about IRS penalties, what triggers them and how to avoid or reduce them. Let's get into the video. Tax season can be stressful, especially if you are worried about penalties. Whether you are an individual or small business owners, IRS penalties can add up quickly, turning a simple oversight into a costly mistake. Understanding what triggers these penalties and how to avoid or reduce them can save you time, money, and frustration. In this video, I will break down the most common IRS penalties, explain what triggers them, and provide tips on how to contest or mitigate them if necessary. Common IRS penalties. The IRS imposes a variety of penalties for different types of tax-related mistakes or misobligations. Some of the most common include late filing penalty. The late filing penalty is one of the most frequent issues taxpayers encounter. If you fail to file your tax return by the due date or extended due date, the IRS typically imposes a penalty of 5% of the unpaid taxes to each month your return is late, up to a maximum of 25%. If more than 60 days pass without filing, the minimum penalty is either $435 or 100% of the unpaid tax, whichever is less. The second thing is late payment penalty. If you file your taxes on time but fail to pay the taxes you owe, the IRS charges a late payment penalty. This penalty is 0.5% of the unpaid taxes for each month or part of a month that the tax remains unpaid, up to a maximum of 25%. Even if you cannot pay the full amount, filing your return on time can help reduce additional penalties. You may also qualify for a payment plan which can prevent the situation from escalating further. The third one is estimated tax penalty. Small business owners and self-employed individuals are required to make quarterly estimated tax payments. If you fail to pay enough taxes throughout the year, the IRS may assess an underpayment penalty. This applies to those who do not have sufficient withholdings or do not pay enough in quarterly estimated taxes. The fourth thing is accuracy-related penalty. The IRS imposes an accuracy-related penalty when taxpayers understate their income by a significant amount or claim deductions or credit they are not entitled to. This penalty is typically 20% of the underpaid tax. In some cases, the IRS may charge this penalty if they determine that the taxpayer was negligent or did not have a reasonable base for their tax position. Next is failure to deposit employment taxes. For businesses that withhold payroll taxes from employees, failure to deposit those taxes with the IRS can result in significant penalties. The IRS charges a penalty based on how late the deposit is, ranging from 2% to 15% of the unpaid amount. What triggers these penalties? IRS penalties are typically triggered by mistakes, missed deadlines, or lack of compliance. Some common reasons Penalties are imposed include missing filing deadlines for individuals, corporate or payroll tax returns, failure to pay the tax owed by the due date, even if the tax return is filed, inaccurate reporting of income or expenses on tax returns, underpaying taxes throughout the year, especially for self-employed individuals. Neglecting payroll tax obligation is a serious concern for small businesses. How to avoid IRS penalties? Avoiding IRS penalties is all about staying organized, filing on time, and ensuring accuracy in your tax reporting. Let me talk about a few tips to help you avoid penalties. 1. File and pay on time. Make it a priority to file your tax return by the due date and pay as much of the tax you owe as possible. Even if you cannot pay in full, filing on time will help minimize penalties. Secondly, set up a payment plan. You cannot pay your full tax bill. Contact the IRS to arrange a payment plan. This can prevent additional penalties from accumulating. Accurate record keeping. Keep detailed and organized records throughout the year. Accurate record will help ensure you do not miss deductions or make reporting errors that could trigger any accuracy-related penalty. Next is pay estimated taxes. If you are self-employed or have income not subject to withholding, make sure you pay quarterly estimated taxes. This helps avoid the underpayment penalty. The fifth one is stay compliant with payroll taxes. If you run a business, make sure you are depositing payroll taxes on time and following the IRS requirement for employee withholdings. How to contest or mitigate IRS penalties. If you already been hit with a penalty, all is not lost. Does not the IRS does provide options for contesting or reducing penalties under certain circumstances. Here is how. Request a penalty abatement. In some cases, you may be eligible for a first-time penalty abatement. This is available if you have clean filing record and haven't had a penalty in the past 3 years. Show reasonable cause. If you can demonstrate that your failure to file or pay was due to reasonable cause, such as illness or natural disaster or an unavoidable absence, the IRS may waive the penalty. Submit an offer in compromise. If you are facing significant financial hardship and cannot pay your tax bill in full, you may be eligible to settle your tax debt for less than the full amount owed through an offer and compromise. Seek professional help. Sometimes penalties are the result of more complex tax issues. Working with a tax professional can help you understand your options and develop a strategy for contesting or reducing penalties. Do not let penalties add up. The IRS penalties can quickly turn a small tax issue into a large financial burden. The best way to avoid penalties is to stay organized, file on time, and ensure that you are paying what you owe. However, if you're already facing penalties, there are ways to contest or reduce them. Thanks for watching this video and do not forget to subscribe to my channel.